I've been trading leverage in crypto for up to 6 years. And there's two big things that I realized. This can either destroy your trading career fast, or it can be a life-changing skill you'll learn forever. Now, I'm one of those that leverage actually saved my life. It first came in and destroyed it a little bit, but then once I let things settle, it became my most powerful tool. And still to today, leverage is a big part of my trading journey. And that's why I'm bringing you this video. Because did you know that 90% of traders lose 90% of their money in 90 days? This is because the market is designed to shake you out, and specifically with leverage. So in this video, I want to teach you the key points that made me a successful leverage trader, to make sure that you are not a gambler, you are actually a trader. And by keeping things very simple, when you've learned this skill, it's a skill that you have for the rest of your life. I went through many bad roads of trading, and that's why I want to make sure that you don't go down the same route. I'm Sheldon the Sniper, and welcome to the Sniper Trading channel. This is where I'm going to share all of my lessons, the good, the bad, but ultimately I got into trading kind of by luck and kind of by desperation. I needed something to help change my life. And when crypto came across, it looked so easy in the beginning, and I started the journey. And then I got addicted, I started to get angry, I started to make lots of silly mistakes, and it made me realize that this game is you versus you, right? It's the mentality game. And that's the main reason why I've started this channel, is I want to share my entire journey. So guys, join the family. Below in the description, hit the subscribe button. And I have something very cool. When I get to 100,000 subscribers, I'm gonna be giving away sniper bags. And what this is I trade a lot off of camera. And every time I make some profits, I put them into these sniper bags. And this is pure USDT. It will not be traded, it will stay the same value. And when we get to 100,000, I'm gonna be giving this USDT to 10 of you guys. Right now, the bags are valued at $8,000, which means 10 people will get $800. The way you qualify for sniper bags is you need to be a subscriber to this channel. And the second one is you need to have a BloFin exchange account. This is the account that I'm trading capital on, and we will be depositing the winnings into your BloFin account. So below in the description, you will find that link. And just below that, if you are looking for more education, I do have a free sniper school as well as a free trading community. All information below in the description. So let's begin. So the first thing that I want to speak about is, what is leverage? And what leverage is it gives you the ability to trade with more money than what you actually have. Now this sounds amazing because it can be something powerful. You're sitting with a little bit of cash, you can make it bigger. Therefore, when the trade goes correct, you can make a lot more money faster. And this is very true. And on the other side of this is it's also a way that you can blow your accounts up very quickly. Because you are trading with bigger size than what you actually have, when the losses occur, you tend to lose a lot faster than what you would with your initial capital. So leverage gives you this ability that you can trade with more capital than what you got, as well as giving you something else very powerful. You can trade the market in either direction. Leverage gives you the ability to long the market, which means you're buying and you want to make money to the upside. And then you can also short the market. So you can predict the market is going to come to the downside. And if you get it correct, you can actually make money. So where this becomes a powerful tool is it can live in any conditions within the market, and you can actually make money in any direction. So this can become a very powerful tool in your toolbox. Now I want to give you my personal views on leverage. Then we are going to jump into the education. So for me, leverage was a start of my journey. The moment I entered trading, I started with leverage. And ultimately it went pretty good in the beginning. Then I took my first big loss. And I was upset that I gave away a lot of money that I made. Therefore, I went straight back into the market because I wanted that money back. And what ended up happening was me losing more. And eventually I started losing into my own capital. Then I was filled with regret. Then I was filled with, how am I going to get it back? And I started to revenge trade to a point where I lost 90% of my entire account. Then eventually I put it down. I got sick to my stomach. I remember throwing up. It was terrible, okay? And I said, you know what? I'm gonna take a 2-day break. I came back after 2 days. I started again. I made some money, gave it back. And ultimately I did this for 3 months. And it started driving me crazy. Because one thing I didn't realize is when you trade with more money than what you got, and you can actually lose it faster too, your emotions go 10 times higher. So in leverage, you can have 10 times more your money, 20 times more your money, but with that comes 20 times more emotions. Therefore, you're driving yourself very crazy, and when you get exhausted is when a lot of the mistakes happen. Then after multiple months of making ridiculous money and losing it all, I got to a point of desperation. I needed to live. I couldn't play around anymore. And I started the journey of let me trade for lunch, let me trade for electricity for the house, let me trade for food for the week. And I got into the trades, made the money, and I got out and I had to spend the money. And I looked back after 2 weeks and I managed to pay my very basic ways of living as well as my bills. And for me, that taught me something very valuable. That holding on to trades for too long and trying to build things too big too quickly, you end up making mistakes and actually doing yourself a lot more damage. Where if you have a goal and a target, you trade, you take the money out and you spend it, it becomes a very powerful short-term tool. So for me, that made me realize that leverage is not long-term wealth. Leverage is a tool that can help create long-term wealth, but it's not long-term wealth itself. It's very good at hitting targets, getting out, taking a break, and doing it again. Rather than trying to build your entire net worth, compounding your accounts in every single trade, and one mistake blows you up very quickly. So I like to see leverage as a turbo on your car, right? Usually we need an engine. Can't just have a turbo, right? But the engine is my savings. This is my long-term part of the accounts. This is money that I don't want to risk highly and gamble too much. Because as long as I have this engine, I can always create. And that's where the turbo comes into play, is because if I have an engine, a turbo can speed that engine up. It can make your vehicle quicker. It can get you to the goal and the life that you want faster. But you can't run a car with just a turbo. So therefore, I trade with less capital, attach it to my engine, and it becomes a very powerful tool on the side. So let's jump into the steps on your journey. So if you look at this over here, purpose, what is this account for? And I'm just going to give you a few examples, right? This can be an account that maybe is for basic living. I want to make $50 a day. And automatically, by knowing that this is your target, you'll realize that, okay, this account needs to be quite active, right? If I want to trade and make $50 a day, this is not a once-off trade. This is something that I need to create that can build me something every single day. By knowing the difference between the two is important, because the strategy of once-off trade and buy something versus I need to do something reoccurring, there are different strategies, which means your tools and your structure will be different. The next few examples is I want to help build my long-term. This is also something that's reoccurring. I want to make some money, build it for the long term. I'm thinking about the long-term game. I don't have much time at work, so I'm going to use leverage when I got some time to make some money to hopefully make me rich later on. Then we have the trade once off, and this is something that I have done multiple times in my journey. I have traded for multiple vehicles. I've even traded for a house. I've traded for furniture. I've traded for a wine cellar, for fences, for solar panels. You know, so many specific things where I need to trade the money once, buy the product, right? And that's it done, right? And something like buying a phone, okay, booking a family holiday, buying Christmas presents. These are all things that can be a purpose behind a specific trade. So the important thing here is to have purpose before you start trading the capital. The next step is money allocation. How much money out of my portfolio do I trade with leverage? Now this one's very important because in the beginning I went all in, right? I had this all-in mentality that this is my money, I want to get rich quickly, so I'm going to go all in, right? And remember, not only does your emotions amplify the more leverage you're on, the more of your money that you're putting at risk takes your emotions to a whole nother level. And the important thing with trading and investing is to be very calm, right, is to make sure that you are looking at things through what you are seeing and not being driven by emotions to what you believe. It's not about what you believe, it's about trading and moving with the market. So for me, less is more in leverage, because why must I risk more of my capital when I can use the exchange's capital? Remember, you can build very big positions from a small amount of capital. So why do I over risk and put too much capital in? So the lesson for me here is I use around 10%. So I want to show you guys this over here, right? If you look at this, you could see that I have money allocation, and this is a basic structure of what my portfolio kind of looks like, right? I have my long-term account. And this one is things that I buy over time. Every month, I dollar cost into them, okay? And I'm looking at a 5, 10, 15-year approach, which means I'm not buying a bunch of junk. I'm buying a lot of Bitcoin. I'm buying a lot of ETH, a lot of Solana, things that I believe in, and I'm just dollar costing whenever I have capital. And this is around 50 to 60% of my entire portfolio. Then what I have is a spot trading account. And what this is this is no leverage. This is tokens that I'm buying for 3 months, I'm selling, making some money, using some of the capital, and then putting some of the capital into my long term. So I'm trading this, but I'm only trading this maybe 2, 3, 4 times a year. And this is also around 30% of the actual portfolio. So we're sitting with around 30% over here and up to 70% in my long term. Then the leverage account. This one, I'm sitting up to 10%. And I do not use the entire 10%, but that is the money that I've allocated to my turbo. Whenever I need to get rid of things in my life, that is the count that I'm looking to do so. Whenever I need to buy something, pay something off, pay debt, pay this, that is the count that I focus on. And that's one that I'll actively trade a lot more than the rest of the portfolio. Now, why again this is so important? Just remember, every time you trade, you are risking. So the more you are trading, the more times you are actually risking. Therefore, less is more when it comes to the bigger part of your portfolio. When I look at my long term, I'm trading 1 to twice every couple of years. Therefore, the mistakes are a lot less. I focus on where I'm getting in, where I'm timing, but I'm not making these errors or being exhausted because I'm not actively actually trading the capital. You will see through your journey, you'll have good streaks and bad streaks. And to be honest, you'll probably be a 50-50% trader. 50% of the time you'll get it correct, 50% of the time you'll get it wrong. So what are you looking for is your wins to be a lot stronger than your losses. This is why, yet again, more money is not the correct strategy when it comes to leverage trading. So if I had a $2,000 account, around $200 is what I'll put away for leverage trading. Now let's speak about the next step. How to actually leverage your money. How does this actually work? So guys, when you jump onto a lot of exchanges, they have a leverage section. And what they do, they allow you to adjust this leverage meter. And what this means is, how much money do you want to borrow from the exchange? So if you look at these options, you will see a 1x all the way up to a 50x. You actually get many exchanges that go higher, but I don't like talking about higher. I feel like that is true gambler's mentality. But nonetheless, you can trade 1x to 50x. How does this actually work? That means if you have $1,000, right, and you're on a 1x, it means you're not borrowing any money. You're going to trade with your $1,000. But if all of a sudden you adjust the meter to a 3x, what that then means is your $1,000, if you buy all of that in, right, you're actually going to be trading with $3,000 position size. If all of a sudden you adjust the leverage meter to a 10x, your $1,000, when you buy it into the trade, will be worth $10,000 position size. If you go to a 20x, your $1,000 will be $20,000. If you go to a 30x, your $1,000 will be $30,000. And if you go to a 50x, your $1,000 will be $50,000. So again, I'm going to go through where's the risks and the reward, but ultimately, where in the world can you have $1,000 and make it worth $20,000 in seconds? This for me was something that truly blew my mind. And it made me realize that if I can master this art, the fact that I can have more money than what I actually have when I need it can become a very powerful tool. So the way the leverage works is as you adjust it, whatever the capital that you are going to put into the trade gets times by the leverage, which then gives you a total of your position size in the actual trade. Now let's jump onto risk to reward with leverage. So I want to start with the risk, because what a lot of people don't understand is there is something called liquidation. And the way this works is if you are going to put in $1,000, what you're saying to the exchange is, here's my collateral, right? This is my capital. I want you to keep it. I want to then borrow money from you. And if it works in my favor, then I want to make money on all the money that I borrowed. But if it goes against me, right, the exchange is sitting there and say, okay, we'll borrow you money, but if we get to a certain point where your initial capital has actually run out, we are going to liquidate you and you cannot get that capital back. And that happens when the collateral, the money that you've put in, has then gone to zero. They will no longer let you trade anymore and they will keep the assets. Again, they are borrowing you more capital. They're giving you money. They need to make sure that they are protecting themselves as well. So the way liquidations work is if you, let's say, at $1,000 and we're trading on a 10x, what that means is every percent that moves on the actual price of the token will make a 10% difference on your specific trade. So if you buy a token at $100, okay, and the token goes to $101, technically that's around 1% growth on the token, but because you're playing with 10 times more than what you actually have, you will lose or make 10% on that 1% move. So if you look here, 10x leverage, every 1% is equal to 10%. Now, if you change it to a 30x, every 1% is worth 30% of growth or deduction to your capital. So if we have a token and the token is valued at $100 right now, and this is where the token is sitting, and all of a sudden you enter the trade, you're going long, you think the token's going to go up. If the token goes to $101, right, ultimately that's around 1% growth on the actual chart. But you at the bottom that has now entered your trade on a 10x must realize that that 10x 10 times the percentage. So that means that 1% on the chart is equal to 10% move in your money to the up or the downside. If you get it correct, 10%. If you get it incorrect, 10% loss. So what it does is it amplifies the growth to the up and the downside, all determining on how much leverage you're on. Now let's speak about when do you get liquidated, right? So if this token's worth $100 at this area right now, and you say, okay, I'm going to enter my $1,000, right, on a 10x leverage. So I have $1,000 and I enter this on a 10x leverage. What that actually means is you are trading with $10K, right? $10,000 is your actual position size. Now you got to ask yourself the question, out of that $10,000, how much money is actually yours? And if you work it out, you take 10,000 divided by 1,000, that's 10%. So technically, you have 10% of the collateral. Therefore, if the token drops by 10%, this token's $100, and it drops to $90, right? That means that your collateral will be finished. And that is when you will get liquidated. They will keep the capital and the money will be gone forever. And it works the other way too. If you entered $1,000 on a 10x at $100 and price of that token ended up going to $110, what is that? That is 10% growth, right? And ultimately, 10% of $1,000 is worth $1,000. Therefore, if price just goes from $100 to $110, you will double your account and your $1,000 will then be equal to $1,000. So by you knowing your collateral and the amount of leverage you're on, you'll understand where you can kind of double your money and where you will get liquidated. So here I just have a few examples of how to kind of understand it, right? If you're on a 3x, right, you got to realize that 3x is borrowing 3 times the amount of money. So if you take 100% and you divide it by 3, it will give you a percentage, and that percentage will determine that if you get that percentage correct, you'll double your capital. If you get it incorrect by that percentage, you will get liquidated. So if you look at a 3x, 33.3333% to the upside will double your money, and to the downside, you will get liquidated. And look, as you start to increase the leverage, how your margin for error starts to decrease very quickly. If you look at 5x, that's a 20% move. If you look at 10x, that's a 10% move. If you go to a 20x, that's a 5% move. That means if you bought the token at $100 and it goes to $95, liquidate it. If it goes to $105, double your money. If we jump to a 50x, it gets even worse. You got a 2% risk and reward ratio, which means that if your token, if you buy it at $100 on a 50x and it goes to $102, you have doubled your money. If it goes to $98, you get liquidated. So it's so important before you just determine how much leverage I'm going to use, you need to understand the percentages. And yes, high leverage sounds amazing, but if not calculated correctly, it's one of the fastest ways to lose your money quickly. And on the other side, it can become a very powerful tool to make money too. So it's important to understand the risk to reward ratio on leverage. Now let's jump into the execution tools. So what we're about to do is we're going to jump on an actual trading platform. I want to show you guys around, and I want to show you the important tools you need to know to actually execute trades, as well as the mode of what you are trading in is super important. So let's jump on over here. Again, guys, I am using BloFin. There is a link below in the description. If you want to trade with BloFin, you can trade this all over the world. And for me, it's one of my favorite trading platforms. So let's jump in over here. When you're in your major dashboard, we are jumping to the future section. This is the section where you trade leverage. Then what you can see over here is it comes up with a full chart, the token, and it looks quite overwhelming. And I just want to go through the key things here that are important. So top left-hand side is to find your token. These are all the different tokens. Whenever you're looking for exchange, you're looking for exchange that has multiple tokens. Because for me, when I'm trading, I'm not always trading tokens that I specifically love or hate. I'm trading where money is going to be. If I see strength in a token, that is where I want to trade for the day, right? If I see weakness and I want to short, I want to find a token that's nice and weak. So you want to find an exchange that has multiple tokens. Then you have your chart section, you have all your tools. So make sure you have an exchange that you can also do analysis on, right? So you're sitting in one specific place. Then on the right-hand side, you have the order book and the price in the middle of the token. And in the middle is the price of the token right now. And you can see that there are buyers and sellers. More buyers, price go up. More sellers than buyers, price go down. Now let's jump into the tools. So the first thing that I want to explain to you guys is leverage has two different modes. And a lot of the exchanges will have these two different modes. The one is called cross and the one is called isolated. And what they're basically saying is there's two different styles and strategies that you can use here. So now you have $100, and let's start with the cross mode. Cross means everything is together. And what that means is if you put in $10 of the $100 and you don't put a stop loss in, and the trade goes against you, okay, and that $10 runs out, what it can then do is it can tap into the rest of the money that's sitting there. So if you have $90 left and the token continues to go against you, you'll go to $80, you'll go to $60, you'll go to $50, and you can go all the way to zero. And that's if it goes heavy against you, because what it's basically doing is it's saying, okay, you're using $10, but we're still gonna hold the rest of the money accountable for that $10 as well. So if it continues to drop and we run out of the $10, we're going to take from the rest. And if the trade goes enough against you, we'll take the entire account. So it basically says that whatever money there is a part of the trades. And it's the same thing if you trade multiple coins. If you have $100 and you put $10 into Bitcoin, you put $10 into ETH, $10 into Solana, and your Bitcoin and ETH are holding pretty nicely. They're not in too much of a loss, but Solana drops 50% all of a sudden. And Solana starts to go against you. And that collateral that you put in the Solana trade runs out. What will then happen is it will start taking from the Ethereum trade. It will start taking from the Bitcoin trade. And your liquidations will start to rise up. And this sucks because if you have many green apples, but you have one rotten one, the rot will start to take over and you can lose the entire crop of apples. On the other side, the positives is if you have multiple trades open and they go into profits, you will then see that the available balance, the amount of money that you have may be left. Let's say you used all of your capital in these tokens, but these tokens go into $30, $50 profits. That money will start to become available for you to buy in and make the position bigger. So when things are going in your favor, it can be powerful because you can make the positions even bigger as it goes. But it's just not worth the risk. It's not worth having one thing go wrong and you end up taking way too much damage. And then it's a lot of damage control after that. And this brings me to the next mode, the one that I use all the time. And this is isolated. And what isolated is is it's exactly what it says. It isolates the specific trade. It isolates the specific collateral. So if I have $100 and I put $10 into the trade, if that $10 blows up, it will not touch the other $90. If I take multiple trades and one of the trades go against me, it will not destroy the rest of the positions. And the only difference is, once you have made your decision that I'm 10xing $1,000, right, you can't use the profits to make the position bigger. You've set your mind up, and that is what it's going to be. And ultimately, that's perfectly fine, guys. I always believe that the preparation before trade is where all the hard work gets done, where you truly understand how much am I risking, how much am I going to make. And it's important not to change that when the trade has come through. So isolated for me is the better option than cross. When do I use cross? If I'm only trading one token and I'm trading a little bit of a risky account and it's a very small part of my portfolio and I want to grow 1,000 into 20,000 and I'm going to try use the profits and build it up and not care if I lose the 1,000. So it's a little bit more gambler's mentality. I do it sometimes, okay, but ultimately if I really want to protect the account and build nice and slowly, isolated for me is the one. Then we jump into the leverage part. So if you click on here, this is all the shiny money that you can borrow. So if you're on a 5x, okay, and here I have $72,000 and I enter fully on the $72,000, okay, I'll trade with up to $370,000 or $360,000 position size on a 5x. If I increase this to 10x, I will then trade with $72,000, $720,000 in position size. If I go higher, 50x, right? And I have $70,000 here. What is 7 times 35? I'll be trading with up to $3.5 million. But remember, 2% liquidated, 2% up, I double my money, right? So this is where you will select your leverage. Please be careful on many exchanges. When you change your token, the leverage automatically sets to a certain amount. So if you're trading on 2x's, 3x's, and then you change to a new token, please always remember to move the leverage meter. It's very important. They have default settings, and you don't want to get into an over-leveraged position when you did not plan for it. Now let's go to the buying and the selling. There is two ways you can buy and sell. The one is a limit order. The other one is a market order. Let's speak about the limit order. The limit order means that you have control of price, that you possibly want to long or short, okay? So you have that control. Does not mean it will be hit though, as well as you don't know the timing of when it can be hit. So when I use the limit order, right, is when I don't have conviction in a token right now and I think it's gonna go to a certain area and I'd rather enter the trade there. But the problem is I can't stare at the charts 24/7. So I would like to set an order in place so that if I'm not with a computer, the order can actually happen if price goes there. So if, for example, I see this token here, Ethereum, that's at $2,900, I believe it's going to go to $2,700, and that's where I would really like to trade it, I can set a limit order. So I can say, okay, I click it on limit over here. I don't want to buy right now, but I do want to buy some Ethereum at $2,700. Okay, below that, you have the amount, okay, of capital. So there's your money. How much of that do you want to put in a limit order? And remember, what it's going to do is this book here, it's going to put your order in the book. And if price gets near there and there's a seller or someone on the other side, the transaction will happen without you being there. So me, if I put 2,700 over here and I want to trade 4%, remember that this is 2,800 of my cash dollars times 10. Don't forget, times, right? So that will be a $28,000 position, okay? And remember, as I click this, the trade will not happen right now, but an order will happen. So you go here to open orders and you can see that this is now sitting in the order book. And if price gets there and there's a person on the other side, transaction will go through. So again, this works in two ways. Maybe I want to open up a long lower down, or maybe I'm in a trade, okay, and I want to take profits later on. So I'm in a trade, I'm gonna go to bed now, I have a stop loss in, I think we're gonna go to 3,300 overnight. I can put a limit order in, and if it gets there overnight, it will take profits for me. As well as shorting. If I want to short at 3.3, I can actually put a short order in. So for example, just to show you guys here, right, $3,300, okay, and I want to short at that level. Do you see here below, it's got the buy and the long buttons. The buy is obviously you want to long, and sell is short. Okay, so if I say 3,300 and I want to do 11% and I want to short, okay, we go here to the order book, and that is where it is sitting. If it gets there overnight, it will take the short for me at that price level. So that's limit. Then what we have is market. Now, market is the quickest way to get in and out of the market. You have control of time, right? You can get in now, all your position. You can get out now, all your position. The only difference though, is you don't have the exact price. And why that's so is if I have $72,000 here, and I want to get into this market right now on a 10x. It means I want to buy up to $720,000 of Ethereum right now. Now, if you look at the order book, you will see that this person right now is maybe doing 70,000. This one's doing 25,000. Sometimes there's a person that's there that has the exact amount of money that you need to do the transaction, and maybe you buy from one person. But sometimes it's not like that. Sometimes it has to buy or sell from multiple people. Let's say there's 10 people that have the total amount that you need to get into the trade. When you are buying from 10 people, which means you're buying at little bits of different price difference, which means that if you wanted to buy now 2,901, right, you might buy at 2,903 because ultimately you're buying. So you lose a little bit on price or your position, but ultimately you can get in and out very quickly. When do I use market buys? Is when I'm really urgent. This token's about to break out now. I need to get in now, market buy. This thing's breaking down. I need to get out, market sell, right? I want to short the market. So I just want to show you guys. So I'll do a very small amount here on a 1x. I don't want to lose any money. Okay, so I'm going to go here. Okay, and this means that the trade will open straight away. So I want to short right now. Boom. All of a sudden, you can see under positions, my short is now open. So the market is the quickest way to get in and out of a token. Okay, you do have a little bit of a price difference. So again, find yourself an exchange that has good volume and make sure that the tokens that you are trading has good volume. Because if they have low volume and there's gaps, you can lose quite a bit by just opening up a trade. Then as we go down, this is the percentage meter, okay? Then we have the very important part, which is stop loss and take profits. So guys, as a leverage trader, you don't want to get liquidated, right? So you need to protect your risk, which means every time you're gonna open up a trade, you're gonna say, okay, I'm gonna buy here. Okay, this is my thesis, this is my idea of what's going to happen. But if it goes against me, where do I protect myself? When is the time that we draw the line and say that we're wrong? Because I think this is something a lot of us humans don't do in life, right? We don't admit when we're wrong. We try to prove ourselves that we're right. And then later on, when all the damage is done, we're crying and we're like, I was wrong, right? So it's important. So before you open up a trade, a limit order, a market order, a long or short, you can already set your stop loss before the trade opens up. And what you can also do is your take profits. And this is known as reward, right? Your take profits is the reward. What will you get if you win the trade? And your risk is what you will lose. And this is known as stop loss and a take profits. So these exchanges have made it so much easier than when I started the trading journey, right? For me, I had to find things. It was quite technical. So here, if I want to market execute and I want to buy in right now, I want to buy 1% right now, I can click on this TP and SL button. And what this does is it allows me to put a stop loss before I open up the trade as well as a take profits. So if I buy now, 2,902, and if it goes to 2,850, that is when my thesis is no longer correct. I'm not right about the trade. Rather cut me now at a small loss so I can take another trade for the win, right? So if I look at this, I say, okay, 2,850 is where I want to put a stop loss to protect me. Where do I think we're going to go from here? Right? I think we're going to go to 3,100. Okay, and it tells me here that if I'm incorrect, okay, I will lose $12, and if I'm correct, I will win $48. One thing that's very important when you're taking trades is it needs to be worth it. You ain't a gambler, right? So this 50-50 is not a good strategy at all. 50% chance I win, 50% chance I lose, right? You want to say, okay, if I'm risking $10, I need to make a minimum of 30. Which means that I can lose 3 times, but when I get my one win is worth 3 of my losses. So you always want to see that this number is a lot bigger than this one over here. Once that's set, you can say, okay, I want to long the market. Boom. Now let's get to the next piece, which is the positions over here. So again, before you open a limit order, a market order, you can put a stop loss and a take profits in. Once the trade is open, you come below over here. okay, it will show you the token that you are in. It will tell you the amount of leverage that you're in, and it'll tell you the total position size of that. And what I mean by total is this will be including the leverage. So let's actually do this as an example. Let me close this, okay, and I'm going to open this up now on a 5x leverage. The 1%, I'm going to do the same trade, 2,850 risk, 3,100, okay, and I'm going to do 1% of the account. There we go. Okay, and you can automatically see that the numbers are higher than what they were previously on a 1x. I click this, I open up the trade. Boom. Okay, so Ethereum, 5x. The total position size is $3,500. The average price of where I bought that is $2,901. The margin, this is how much of your money is in the actual trade. You can see that this is sitting at $709. And if we take 709 and times it by 5, that's how you get to 3,543. Okay, so I only put in $700, but I'm actually playing with $3,500. Then you have your P&L. This is what the trade is doing right now. Is it in a win? Is it in a loss? By how much percent? Then you have the realized. This is if you have gotten in and out for the day. Let's say you took some profits earlier and then you're trading now. This will tell you what you've actually made for the day. So even this trade, you could be down $6, but for the day, you could be up $50. This is where it will say realized over here. Then you have your liquidation price. This is why we always put stop losses. This is where you will lose all of your money, right? Then you have the price of the market right now, and you have a margin ratio. And as you scroll across here, there are some nice little things that you can tweak your trade once you're in it. I don't tweak too much once I've made the decision, okay? But you can see here, if you want to market close and exit the position right now, you can click this button. If you wanted to reverse, this is a little bit more advanced. You can turn from a long to a short. This I would do a little bit later in the career. And then you have your TP and SL. If you wanted to go and change or adjust your stop loss or your take profits, you can do that in the trade. And this button here, market close, boom, get me out of the position completely. Then here we have the order. So if you want to go look, a very important thing with trading is to have a trading journal, right? We actually have one below in the description if you want to have a look, okay? But this is where you can go look at where did I buy, where did I sell, where did I go right, where did I go wrong? Never be ashamed to go look at your own data to make the improvements that you're looking for. And then if we go back over here, this is all the basic information. So guys, why I just showed you this is because many exchanges have the same type of settings. The main thing you need to know is what mode are you trading on? The second thing is ways to get in and out of longs and shorts. You have limits, you have markets. Limits is kind of a little bit more prediction, okay? It takes time for it to play out, okay? But you can get the price you're looking for. Market, quickest way to get in and out. When I'm about to open up either of these trades, putting a stop loss and a take profit is important. Make sure that your risk is worth the reward. You need to value how much are your wins worth? And for me, if I must be honest, I've been trading for 5 to 6 years now. And I would say about 7 months of that was really good trading that changed my life. So around 3.5 to 4 years, I got it wrong. 7 months, I got it right. And today I'm in a very good financial position. And it just shows you, it's not about winning all the time. It's about making sure your wins are very powerful versus your losses. Then at the bottom, you have your positions. Your position size is important. Okay, you can also monitor when your trade goes into profit. You can move your stop loss away from risk, so you can adjust that. And you also have your order book to go look at any data if you need to make changes in the future. Now let's jump a little bit into actual strategies. I'm going to show you guys some charting, and I'm going to show you that every time I'm looking to trade, how do I know if I'm going to long or short? What am I actually looking for? So the first thing I want to show to you guys over here is I just want to show you that a token will only move in 3 directions. You have an uptrend, you have a sideways trend, and you have a downtrend. And what we're looking for when we're looking to open trades is when something is going to change, right? So if we've been going up and we slow down and we're about to come down, this is really a key place that I want to look to open up a short. When something has been coming to the downside and is about to go up, this is the key point that I'm looking to open up the trade. So what that does for me is if I'm looking to go long, right? I want to make money to the upside. I'm looking to buy redness. I'm looking to find tokens that have been going down, slowing down. And when they're about to change trend, that is when I'm actually looking to open up the long. When I'm looking to short, I want to find a token that's been going up for a while, slowing down, and when it's ready to pull back, that's when I want to short. So already when it comes to my trading, I'm working against the market. When the market is red, I'm looking to buy for green. When the market is green, I'm looking to short for red. And for me specifically, I ain't here to predict. I just want to move with the market. When I predict, then my ego steps in. I get one right, I think I'm king of the world, and I stop listening to my rules. So my whole concept is no prediction. Move with the market. Find the weakness. Find when things are going to start to change. Now let's start a little charting journey together. The first thing I want to show you guys is very important. On the top side here, you have something called timeframes. Now timeframes are very important because when you use the right data, right, you'll understand when you can kind of take trades in the time frame that you're looking for. When I look at this, I see one token at the top and I see multiple different time frames. I have a 5-minute, 15-minute, 1 hour, 4 hour, and a 1 day. And what that means is if I'm on a 5-minute time frame, it means every single candlestick that is being formed takes 5 minutes, right? So for 5 candlesticks will be 25 minutes, okay? And as time goes, you will see more candles will start to print. Then you'll start to see it will start to create a type of pattern. And I want to track that specific pattern, right? It's the same thing if I go to the next time frame. 15 minutes. Every candle's 15 minutes. If it's an hour, every candle is an hour. So as you go to the higher time frames, the candles take longer to print, which means they take a little bit longer to form the structure that you're looking for to take the trade. So I've created this nice little graph here. And it just explains time frames. That if you want to trade on a daily basis, I want to make money in the next couple of hours, you actually don't care what price is going to do next week or next month. You just care what is price going to do for the next 24 hours. So you want to use a smaller time frame because the rest of the information is actually irrelevant. It's about what is the token going to do today. So if you look at a 15-minute or a 1-hour time frame, this gives me data and an understanding of what can happen in the next 24 to 48 hours. So if I wanted to make money today, I'd very much be using lower time frames. But let's say now I'm working and I don't have much time. I still want to trade in the week, but I have a full-time job. Then I'm looking for a time frame that will give me one trade for the week. And as you go up and you see around the 4-hour time frame, it takes 4 hours per candle to play out. Therefore, when a trade plays out, it can take anything up to 7 days for the trade to actually play out. So the 4-hour works perfectly if I don't have time to stare at the computer. I'll do my analysis on the 4-hour. It will take a bit of time for it to form. But when I take the trade, I'm doing it for the correct data over the next 7 days. If I want to take a trade for an entire month, I'm going to be away. I want to take one trade, make some money when I come back, the daily time frame. So this diagram over here of all the time frames just reminds you that when you want to take the trade, use the correct data. Because if the daily is saying we're going to come down, but the 5 minutes saying we're going to go up, and you only need to make money for 2 hours, which one are you going to trust? Are you going to trust the daily? Because the daily does mean price is going to come down, but over 30 days to 60 days does not mean that for the next 2 hours, the market won't go up. So by not knowing the difference between the time zones, you're going to use the incorrect data and you're going to make the incorrect decision. Because even if a token's going down, it's going up and down and up and down. Overall, it's going down, but there is times of green, there's times of red, there's times of green. You want to catch the correct time frame. Now, the next thing when it comes to charting is to create yourself a little bit of a robot system, right? You will all have different things that you kind of relate to. And for me, I kept it very simple when it came to charting. I didn't care about predicting. I just wanted to know when the market was going to change, and I wanted to be a part of that change. I always believe to be ahead of the market, right? To be in before the rest get in. So before this token's about to go green and go aggressive to the upside, I want to be in. I don't want to be that person that sees the green and says, now I want to enter in. So the key for me was not to predict, to just show me when the cracks and when things were starting to shift. So what you want to create yourself is a little bit of a checklist before you enter a trade. And what this does is it gives you a list to continuously work on, but it starts to automate your system. It starts to make your timing a lot quicker when it comes to entering and exiting. Because one big hint that I have about trading is you need to have confidence when you enter the trade. You can't do this thing where I'm going to try get in now and then I'm kind of going to figure it out as it happens. That's when a lot of mistakes happen. That's when the market throws you around and gets your emotions going crazy. And it's really an unsustainable type of strategy. For me, what has always done the best is confidence, right? I'm about to take the trade. I know what I'm going to lose. I know what I'm going to win. I'm in. When I'm in, I'm not going to go and change anything, because if I lost, I already knew where I'm possibly going to get back in, or a loss will actually give me a better trade the next time. So by having confidence, it's super important, and that's why you want to create yourself the system. So I'm going to explain to you guys my system over here. Let's jump onto the iPad, right? I like that I can draw things again. Very cool. My specifically 4-step method, okay, is charting. And what it is when a token is moving to the downside, I see something quite simple. I see that it's making lower highs each time and it's making lower lows each time. Therefore, there's green, there's red, but ultimately the token is moving to the downside. Now, when it's moving down and it's continuing to put lower highs and lower lows in, that doesn't mean that this thing's strong and it's going to go up yet. It's actually proving to me that it's going to continue for as long as it does lower highs and lower lows to the downside. So what I'm looking to actually do is just put one simple line in. And what this line is doing is it's tracking this token for as long as it wants to continue that momentum. But the moment that it shifts and it breaks that trend line, that for me is my execution point. That for me is to say, okay, I can take this trade. Now, why? Because when there's been multiple downside, that means that there's opportunity when price goes up again, right? So if something's been coming down, and let's say it's come down minus 9%, the bounce can easily go up 4%, right? So as we go up again and we bounce, I can easily get a plus 4% trade over here. And remember, with leverage, that can be a lot more. But nonetheless, the upside is there for me. Now, if I buy on the break of this trend line, what is it doing for me? Firstly, it's showing me that there is a decent amount of upside. But the question I have for myself is, how much downside, right? And for me, if we are putting our first higher high in, we should not make a lower low. So automatically, a stop loss would go in this piece and this area over here. And if I look at my loss can be around 1%. And if I get the trade right, I can win 4%, which means I am then using a risk to reward tool. And what the risk to reward tool is it shows me that right now, if I stick with this method, my one win is worth 4 losses. Because if I lose 1%. But if I win 4%. That's why for me, a simple thing is a trend line. As it breaks, I already know that my risk is lower than my reward. Therefore, I can be a robot. And what I'm looking for with trend lines specifically is I'm looking for tokens that have the most touches, right? I want to find a trend that's going to give me a good chance of being correct. So if I see a trend or I see a token that's come down twice like this, 2 touches, that's okay. 50-50, it's going to work, right? If I can find 3 touches, 4 touches, 5 touches, that by far is the trend that I will choose. So the more touches gives me way more confidence. So again, trend lines is one of the important ones for me. The next one is when the trend broke. Did the chart make sense where it was rejecting? This is something that I use, which is risk to reward. Risk to reward is a very simple concept. Okay, let's say a token's been going sideways and the top here is $10 and the bottom here is $8, right? The token's been going sideways. And the moment that it breaks through the top, what's this known as is resistance. This is a resistance point. It's telling you it's a certain point where sellers have been holding price down. We just haven't been able to get through this level because people are selling every time we get there. But the moment we get through it, you'll tend to see price move up quite aggressively. And it's known as breaking resistance. And when it breaks resistance, it's going to go to another point where previously there was an area of where we rejected. And that's the next resistance. And what you'll tend to see is at some point, price will come down, turn this level into support. And when you see this uptrend where I spoke about higher highs, higher lows, lower highs, lower lows, what it's doing is it's walking up and down like stairs. So as it's breaking to the upside, it's breaking resistance, turning it into support, breaking resistance, turning it into support. And it's doing this step to the upside. And it's the same thing when price is coming to the downside. It's turning these previous levels, right, that was support, turning them into resistance. So when I'm using the trend line and support and resistance, I want to see, let's say a token has been doing this and now it starts to go up and I want to short it, right? The first thing I'm doing is I'm putting in a basic trend line. As that trend line breaks, where we have rejected, does it make sense? Is there resistance? And here you can see that there is a beautiful resistance top over there. So what that's doing is it's giving me two reasons of why to take the short, not just one. We're at resistance. You always want to sell into resistance and buy support. So when we're at resistance and we're breaking trend and the risk to reward makes sense, that's 3 reasons already to take the trade. Now, another part of why I use trend lines, which is so important, right, is it helps me a little bit with timing to know when's the trade going to be ready, right? This is something that I only learned 4 years into my journey, right? Because I used to overtrade. I used to trade when the trade was not ready. So where trend lines are powerful is if you see that we are going like this and price drops, you got to remember that when we started the downtrend, this was the initial momentum that we started in, right? And the moment we dropped down, we created this gap between price and the trend line. And what that means is it means that if you look at the market cheat sheet, whenever you see a crash, there needs to be this depression sideways phase before it goes up again. It doesn't just go up. It drops, goes sideways, drives everyone crazy, gets a lot of people to get shaken from the market. And then when everyone quits, market goes up again. So the trend line taught me that, hey, I don't have to work out where is the market emotionally right now. The trend line will help me. So when I see that something has dropped like this still means that this is a good trend. This is the trend that I want to buy. But it's telling me that there is space between price and the trend. And it's telling me instead of wasting money now, because it's very likely this token's going to do this for a little while before it breaks out, why don't you just wait? Why don't you just wait 2 hours until your trade is ready? And when the breakout happens, that's when you enter. And what this does again, because your ego and your brain's going to be telling you, go, 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 go. This is telling you if you want to win, then play the game to win. The market needs a little bit more time. Go for a run. Go to work, go do whatever you got to do to keep a little bit busy. And it's telling me in the next few hours it's ready. When I see sideways happens and then we break the trend, perfect time for me to enter the trend. So trend lines help me with identifying trends and when things are changing. And it also gives me an idea of when my trade will be ready to be taken. The last one that I look for is something known as a Stochastic RSI. It's a very simple tool that just alerts you that if the token is oversold or overbought on that specific time frame. So what that means is when I'm looking to short, I want to see a lot of green. And the reason is because when buyers are buying, there's a lot of acceleration, but it gets to a certain point where it slows down. And this for me is a hint of exhaustion. The buyers are starting to slow down now, and that's the perfect time when sellers are going to step in. And what I need is a very simple meter to just help me with that. So what you have is when you see a chart moving to the upside, you will get this bar, and I'll show you guys this on TradingView now, where it's a simple RSI that goes up and down. Right? When it gets to the top point, it's telling you that there's been a lot of green. Look for exhaustion, right? At some point, this thing's going to start pulling back. When it's at the bottom, the shorters are starting to get exhausted. Get ready for the bounce. So when I see this trend break and we're at resistance and risk to reward makes sense and the RSI is similar and close to the top area, that's the 4th confirmation for me to take the trade. When all 4 of these boxes tick, I'm in the trade with confidence. I've really worked it out. I have a full understanding of how it's going to go and I become a pure emotionless robot. Now let me show you all that theory and show you in action. So I want to make money in the next 24 to 48 hours. The token here, for example, is Ethereum, right? We just started using it. So again, the first thing that I'm looking for is I want to make money in 24 hours. So the time frame, the 1 hour time frame matches that perfectly, right? Gives me enough time for me to execute the trade and to also use the correct data. The next thing that I look at is what has this token done recently? So the first thing is it went aggressively to the upside, right? Then it's now started a downtrend. So automatically, if I'm looking at making money today, the downness has already kind of happened. So I'm not looking to short this token. I'm looking at possibly longing this token. Now, again, I don't want to predict. I just want to keep it nice and simple. So the first thing I'll do is I will draw this top trend line. I'm looking for a trend line with the most touches. So if I go and draw a trend line here, that's a 2-touch trend. Is there any better trends that I can find? If I choose this one, it's 1, 2, 3, 4 touches. Which trend am I going to believe the most? The one with 4 touches. Now, the first thing that's very important that I see here is my trade is not ready right now. It's telling me that there's still a bit of space here. We can easily see anywhere between 4 and 6 hours from now, the trend will break. So automatically my brain, I can be upset, I can be whatever it is, or I can just admit to be like, okay, if I enter now, I'm predicting I'm becoming a gambler. Do you want to make money today? Yes, I want to make money today. Wait for when the trade is ready. If you look on the left-hand side here, do you see how the market went sideways and shook up before it went up? Right? These are all things that are very important, as well as this over here. If I just put a trend line in, it would have told me, hey, don't waste your time for 3 hours. Buy it there. And look what happened after. I don't want to waste my time. I don't want to waste capital. So the first thing here is your trade is not ready right now, but it will be in a couple of hours. So something like this now, I have one line, gives me a little bit of time to understand when it's going to be ready and when I'm buying. The next thing is we've now slowed down a little bit here. So what I would like to see is I'd like to see us bounce on support. You see on the left-hand side here, I don't need to go back too far with history. I just got to see the recent moves. This is an area of where we have previously been. And this could be support. We are in there right now. So that's an area of where we can bounce. Does that mean I'm buying now? No. I'm looking for when it breaks trend that it bounced previously on a strong level. That's what I'm looking for, to make sure that it's actually going to be a real bounce and not just bouncing out of nowhere. What I also have then is another level, because does not mean price cannot go lower. So right now as it stands, I have 2 orange boxes of where price can bounce. Then the next thing I want to do is my RSI getting to the bottom? And you can see it is getting to the bottom. Now when the RSI gets to the bottom, stochastic RSI, the 1 hour, it can sit 2-3 hours before it goes up. So if you look at when it entered here, it entered at 12 o'clock and only exited at 3 o'clock. Right? So that's 3 hours that I can take over here. So just because we're at the bottom mustn't bring this urgency that I have to enter it right now. The main thing you're looking for is it in an oversold area? Yes, it is. So the way I want to see this play out, so where I'm looking to take along, right, is I want to see over the next few hours in either of these boxes, it can even be a little bit lower down, I want to see a bounce sideways, and when I see that break, that is where I want to execute the trade. Why do I want to do that? If you go to this section over here on the side, you get something called a long position, and this is the risk to reward tool that I was speaking about. And you click this over here, and you look at, okay, this is where I'm going to protect myself, okay? And then what I usually do is whatever the token has basically done previously. So if this was the down that we have gone, I always look to take profits halfway, right? It's called the mid-range. And this is just something that has worked very consistently for me for a while, because you're not holding it for too long and you're continuously taking profits, which is very good. So if I look at that, where is halfway of this downside over here? And you can see that's a 2% growth to the upside. How much risk am I putting? Is 0.46%. So right now, my risk to reward ratio is 4.49, which means that my one win is worth over 4 losses. Does risk to reward check in? Yes, it does. Now what do? I go keep busy for a couple of hours. When that is there, I will market execute in. I'm a market execution trader. If you wanted to predict that it's going to bounce in one of these boxes, you could do a limit order. But for me, when this breaks over here, I already know, okay, I'm going to put my stop loss at $2,850, right? My take profit will be $2,932. I can already set that in, right? And when that trend breaks, I will execute the trade. My stop loss will be in and my take profits will be in. So you can see by just having a 4-step method, it took me 5 minutes to know when I'm trading, right? And that for me is powerful when you're trying to figure things out and these type of coins. Now, another question is, how do you know which coin? And this all depends on your risk appetite. So I want to speak about this for a section. Let's actually make this a topic. Let's put it at the top here, right? Risk appetite on how much money do I take per trade. Guys, you've got 2 different strategies that you can use when it comes to trading. You've already set aside the money that you want to use for leverage. Now you got to ask yourself the question, how much time do I have to spend on charts? How actively am I going to be trading? If you're going to be trading actively, you got to remember that the more you trade, the more times you're putting your money at risk. And because you have the power of using leverage, you don't have to worry about the amount of money because you know you can get a lot more money than what you actually have. So when I'm trading more actively, and let's say I've set myself aside $1,000, I choose to have more lives than trading more of my capital. So if I have $1,000, I can easily say, you know what, I'm only going to trade $200. And the other $800 is backup lives, because sometimes the market has this crazy move that may hurt one of your positions or one of your accounts. And you can be sitting there and being so upset. Or you can be like, wow, this market's just dropped 30%. If I can buy now and wait for the trend to break and buy, I can make a lot of money back. And that for me was way more powerful than putting all my money in. So when I'm doing the more approach that I'm going to be active trading more, I give myself more lives. Whatever money I have put aside for leverage, I divide it by 10 or divide it by 5, and I only trade with around 10-20%. And when I'm doing that, I can use any different types of leverage. And my leverage is determined on the risk. So let's speak about that for a second. If I look at this now, there's the trend. We go sideways, we start to break. And I look at my percentage of where my stop loss is going to be. And I see that my stop loss is going to be 0.3% or 0.29%. Because I'm using this strategy where I have more lives, I got to ask myself, what is the risk appetite per trade that I want to take? What's the maximum amount percentage will I risk per trade? If I have multiple lives, I could have a slightly higher percentage. So I could have 5% as my top. I don't want to lose more than 5% per trade. Where on the other side, if I'm trading with more capital, less lives, I maybe don't want to lose 2% per trade. So you got to kind of look at the two different strategies, because the one that's more aggressive, you got backup lives, you're going to go a little bit more on the aggressive approach. The one that's more conservative, you're a little bit busy, you can't sit and trade all the time. You're rather going to trade a little bit more capital, okay, and a little bit slower, because you're not going to be trading all the time. So your margin for taking risk is a lot less than the one that's trading a lot more. And even if I'm using the conservative approach, I will still have a backup life or two. So if I have $1,000, I'll probably trade with $500 or $400. Have $600 as backup. Remember, that $500 you can trade as $5,000. So why are we worrying about putting more of your money in? Use the exchange as money. Get better with money management. So I'll always have a backup life or two so that something massive happens, I can turn it into an opportunity. Now, when you've looked at both kind of approaches, this trade comes along and it's 0.3%. Now, if I've made between the two strategies, the one I don't want to lose more than 2% per trade, the other one 5% because I have more lives, that will determine my leverage on this position. So if this is 0.3%, and I enter this on a 10x leverage, I got to remember that that percentage over there must be times 10. So if this is 0.3% and I go on a 10x leverage, I'm risking 3%. Therefore, if your risk appetite on the strategy that you have chosen is only 3%, when that happens and that's the percentage, you can enter this trade on a 10x, which is incredible, right? Now let's look at the other strategy, 5%. I can risk 5%, I'm a little bit more aggressive. This is saying 0.3%. If I times that by 10, that's 3%. If I times it by 15, that's 4.5%. If I times it around 18, that's 5%. Which means for me on that account, because I've taken time for the market to go sideways and to give me less risk, I can start the trade-off on an 18x. So the way my leverage is determined is on the risk and the risk appetite of my strategy. That's why I time trades rather than chasing trades. If we had to buy this token right now, and you had to say, Sheldon, trade this token right now, do you know where I'm going to be putting my stop loss? Let me show you. So this is just a Fibonacci tool. I don't want to speak about it too much, but realistically, I'll put a stop loss down over here. All right. So if we look at me buying here now, that's 1.73%. So if I look at either of my strategies, that's a 2 or 3x max if I want to enter right now. But if I give it 6 hours, I can be anywhere between a 10 and an 18x. Which trade would you prefer? Now we jump onto the most important part of your structure. And this is the rule system. Guys, end of the day, we're all different, right? We have our strengths, we have our weaknesses. But ultimately, for us to become good traders, we just got to learn how to work with those strengths and weaknesses. Trading is not that difficult. Discipline's the hardest. Sticking to the rules is the hardest. But this will come over time. You'll get to this point where you hate losing, right? And you'll start listening. And when you start listening, you'll start to realize, okay, if I spend more time on the structure and the system, I can just follow it and it's there to protect me. Everything that I want and I don't want to lose is all built in that structure. And that's why we have a rule system that is there to protect you from your strengths and your weaknesses. Now, if we look at this over here, here's a very basic rule system of what I use in my trading. But before I start with that, I want to explain something to you guys. The way I treat my journey is I like to look at my trading as my own token, right? The Sheldon trading token. Because ultimately, if I'm starting here and I have a, let's say, $500 account size, right? And then I see through my journey, I managed to pick it up to 1,000, right? To 1.5, okay? And then it came down to like 800. Okay, cool. And then it went up again and then it came down. What I will notice is my actions are creating a trend. There's times where I went from 500 to 1,500. And there's times where I went from 1,500 to 800. And then I went from 800 to 2,000 and then back to 500. So ultimately, if I draw it out, this is how I'm trading. Now, when I look at this, I'm not truly upset about how I'm trading. What I'm looking for is, how can I better myself next time? How can I find cracks before the damage gets done? And if I look at this, a simple trend line at the bottom here would have told me when my trading streak is about to go a little bit bad. Now, I'm not saying to use a trend line. What I'm trying to show you is this. I did something here that made me change my habits, that made me change me from winning into losing. What did I do wrong there? Now, something that's super important with trading, right? I'm going to draw a very simple thing here. And I like to call this my emotions, right? So I'm just going to put your emotions. Okay, then in the middle, I have N, which is neutral, right? Then I have the red emotions. I'm angry, I'm upset, I'm irritated. Then I have the green. I'm going to be rich, buy the Lamborghini, right? I'm excited, things are happy. Now, when you are trading, you start neutral. Sometimes we start a little bit maybe in one of the top, but ultimately you want to start neutral. You don't want to sit here and predict and react off emotions. You want to be like, I've done my analysis, I'm nice and calm, I'm entering the trade. You're neutral. When the trade starts though, and your $500 goes to $1,000, the normal human reaction is to get excited. All of a sudden, your emotion bar will start pushing into that area over there. Now, the way I see this is neutral is when you're in control. Anything in there is when you are in ego mode. Okay, and ego is not a bad thing, it's just you're not a true version of yourself. You're very emotional. You're reacting on emotions. And it's the same with the red side, ego. Now, ego is the biggest mistake maker in trading. So now, my 500 goes to 1,000, I start to go into this excitingness. Now, this excitingness, I start being a little bit more humble. I start thinking I'm a little bit smart. I start telling a bunch of people that I'm good. I start putting this extra pressure on myself. So even though my account's growing, I don't realize so is my emotional chart. And when you go into this over here, you start to get to a point where I'm very good at this. So this time I'm not going to put a stop loss. This time I am going to enter to, I know I'm not supposed to trade right now. I'm going to trade, right? And this is when, boom, that mistake happened. And all of a sudden something that was looking good when you went from $500 to 1,500, all of a sudden you went to a downtrend and you end up giving up to 40% of your money back. And that's just because you went into the state of ego. You went to the state of the emotions being up there. Where if you rather stayed in the neutral position, right? Where you are humble and you won and you ain't better than nothing and you got the trade right, you're excited. You would have realized that I should have actually just taken a little bit of time when I took profits. Why did I get back into the market? I took my 500 to 1,500. Why didn't I just take a couple hours break? Now, what these breaks do is these breaks allow you to neutralize again. The more you're in, this is massive dopamine, right? This is like caffeine on a whole nother level. It's going to get you spiked up, which means if you stay in the caffeine for too long, you're definitely going to go into the emotions. But when you can tap in, and the moment you're going into these emotions, you can bank some money, sit back, wait for yourself to neutralize and do that again. That's how you create sustainability and these growth, because you are rebalancing your emotions and your mind. And it's the same thing when you're losing, guys. This is why losing can really make more losing. You kind of start hating the game because it's the same thing. When you entered, okay, and let's say this time now you entered on your $1,500 and all of a sudden it starts going down, okay, you're now at $1,000. What then starts to happen? you start to enter down into the red emotions. You start to become panicky. You start to feel a little bit of regret, right? And what that does is it makes you angry. And because you're angry, you want it back now. Therefore, you'll probably over trade. That's why we look at this graph here. I never said that we went from 1,500 to 800 quickly. Look how we went slowly. Because you were supposed to stop a long time ago. You're still trading. And then what happens is you get to a certain point where you have a little bounce, you get a little bit of hope, and you end up completely losing the account, if not going back to scratch. And that's because you stayed in those emotions for way too long. And that's the simplicity. So going back over here, neutral. You've taken a loss. Okay, no problem. Get back to neutral. Take a breather, right? Go do something you enjoy. Breathe, because if you're going to stay in those red emotions and continue to trade, you're going to continue to make the mistakes. Get back to neutral. You see how this diagram here just makes very simple sense. Okay, so again, if you're ever stuck, you can actually go take your net worth that you were in trading and you can draw it out. And you can see, okay, I did well there and then I did something wrong. What did I do wrong here? Was it emotions? Was it I was fighting with my partner? Was it I was distracted? I was not focused on the trade. I was busy with other things. You will start to see that where these big losses that you were making or reversals you were making, you were doing something. Then what you do is you jot that down and you build rule systems about that. So for me, as an example, I know I can get very much into ego mode. When I'm in ego mode, nothing on this planet can hurt me more than myself. And that's why 2 losses in a row, I take a 12-hour to a 24-hour break. 2 wins in a row, 12-hour to 24-hour break. Because that protects me from going into these emotions and it helps me remain in neutral. And that's when I'm on fire. And here are a couple more. You want to know what really gets you into your emotions? Getting liquidated is when you lose everything. That's when things really, that's when you go into the savings, you start borrowing money. It's a place you don't want to go, right? That's why a rule for me is always using stop losses. As much as times you'll get stopped out and the trade will end up playing out, it doesn't matter. On the long term, it is something to protect you and it keeps you in the game for the long term. Then we have things like news days. There's days where Trump's speaking, Powell's speaking, things that happen on a macro scale. When these events happen, they can affect crypto and make it quite volatile. And as much as you can be brilliant at charting and TA and these type of things, you get these unnatural moves that happen. No one can predict them. They just come out of nowhere. That's why for me, a set standard rule is don't trade during big news events. Because it may work the first time, but a lot of times it doesn't work too, right? And that just really demotivates and it puts you a step behind. Then we have a very big one. Guys, and this is what separated me from the rest of the market. Before we started a YouTube channel, I never watched any YouTubers. If I can say I watched 5 YouTube videos in my life on trading before I started becoming a YouTuber myself, that was a lot. And the reason is because all the noise was just getting me nowhere. And for me, it was about, Sheldon, you're the only one that's going to figure this out. So instead of following a bunch of people, just spend time in the market. Get to know yourself. Get to know the trends, the tokens, these type of things. So a set rule for me is make sure wherever you get your information, make sure it's information that you can use to make your own decisions. This following people and these type of things, you're never going to learn the skill. And you're going to be upset when you lose money and it goes against the person. And to be honest, it's not the trader or the YouTuber's fault. They actually know how to manage risk. They will lose money, but they'll always have money again to go in again. But you might not know that. And you might go all in and trust the person and these type of things. You need to empower yourself. So a set rule for me is spend time in the market rather than just following others. In the morning, you can look at people that you trust, 2 or 3 information sources, get the knowledge for the day. You go spend time in the markets. You build yourself. And that's when you'll see that your losses will get a lot less because you're finally improving yourself and your own structures rather than just relying on someone else to change your life. And then the most important, community. In my journey, I did not watch YouTubers, but I had around 5 people that I traded with on the journey. We all lost our money to a scam. We all lost a lot of money in the COVID crash, right? And we all basically had nothing and we needed to live on this. So us together, we sat at night until 4 o'clock in the morning, right? 4 months and months and months. And we spent a lot of time together. And there was times that I was really hating crypto and I wanted to quit forever. And they kind of held me together. And it was the same the other way around. They wanted to quit, I was there. Community is very important. Now, what type of community? Not one that is just with random people that are upset, and you want to find go-getters. Those that are there to truly change their life from this industry. You want to be in the room with the same people. A big thing that changed my life recently was I joined an entrepreneurs organization. I was building a business and I felt very alone because I've never really had many people build businesses in front of me. And it was very emotional and very tough for me. When I joined this 𝗦𝗛𝗏𝗏𝗏 organization, they put me with a bunch of people that I call my business buddies now. Shout out to them if they're watching. And these guys all run their own businesses. And for the first time ever, I was no longer alone. I could speak about things that helped, and it grew me. And it was so nice to have a place. So it's important to have a community that has the same views as you do. It's not about the negativity and the things that went wrong. It's about those that are there to fight through the hardness and are going to get to their targets. Now guys, I have a community for you and it's free. This community is called 𝗦𝗏𝗏𝗏 Trading. If you look below here in the description, we have a free community of thousands of people. I've been building this since the beginning. We have incredible mentors in there, incredible educators in there, and to be honest, the most incredible community ever. We don't take any negative vibes in there. We are making sure that we have a powerhouse of people that are going to make it. If you don't have a community, this is a perfect one for you to join right now. Take your first step. So for those of you who have made it to the end of the video, well done. Guys, this is truly a very strong start and foundation for you. And there's a lot of things you can add on top of a structure like this. But whenever you are stuck and going through routes of bad streaks and things like that, the best thing to do is always to go to default settings. You know, when things are showing errors on your phone, default settings, get things back to where they were. This is a great base that at any point you can come back to. And not only that, it's a foundation that you can build on top of. So I want to do a quick recap. The first thing that's very important is purpose. Just know what you're trading for. This allows you to be structured and allows you to understand that there's a journey to this target and it's not going to change when it's there. Because if you start changing with things, we all know cars and motors, right? The moment you start opening the motor up, it starts to give a lot more problems. It's exactly that. By having structure, you start to get confidence. You're no longer going to be scared to enter trades anymore because you've built this system and you know the purpose and you know that a loss can bring another opportunity. So purpose behind a trade is vital. Knowing how much money of your account to put in is also important. And remember, there's two different strategies. If you're going to go more aggressive, trade with less capital and have more lives. If you are very busy and you can't trade too actively, you can have a little bit less lives and trade with more capital. These are all very simple things that are going to help you on the journey. And for me, I put up to around 10%, but to be honest, if you have $2 million, you don't have to trade with $200,000. You can trade at $10,000. But the example that I used was $2,000. If I have a little bit of a smaller account, 10% is usually a good ratio. But as your money grows, you just got to keep that to a very responsible level, that you're not trading 50% of your money on leverage. Then we went down the route of leverage. Like, how can we grow our money so quickly and how can we trade with more? Understanding that is super important and how it's calculated, how the wins, the risk to reward. And that's the next, the risk to reward. How much will I win? When will I get liquidated? How do I protect myself and know how much leverage to use and when to use it? Super important. Then we went through the tools on the exchange. Guys, all exchanges have these very basic tools. So it doesn't matter where you are trading. It's just important to know the modes, knowing how to get in and out, knowing how to put a stop loss and a take profits, and knowing how to manage your positions. The last thing you want to do is make $1 million and make an error, right? Imagine you've worked so hard and you just clicked the wrong button and you lost 50% of your wealth. These things happen. Make sure you don't shortcut that system. Then we went through the two different strategies of how much you trade with per trade. And remember, also different tokens. If you're going to go with more volatile tokens, trade with a little bit less money. If you're going to go with slower tokens, maybe let's say Bitcoin, go a little bit more capital. These are all little things that you can adjust on your journey, but just making sure it's nice and structured and composed. Then we jumped into the charts. Guys, end of the day, you will find what works for you on the charts. For me, I have my system. The main thing is I'm a robot. Firstly, when is the trade going to be ready? Secondly, do all 4 of my boxes tick to take the trade? Is it built around me having risk and very good reward, knowing that my win and loss ratio is powerful? One win is worth multiple losses. That's what the system's built for. So you can use moving averages, all different things. The main thing is have a system that has a checklist that can get you in and out with confidence. Then I just showed an example of me taking a trade and how I knew the trade will be ready in a couple of hours and what exactly I'm going to do. And the most importantly, the rule system. This is your own personalized system that is there to protect you. If you're ever stuck, chart your journey. Look where the cracks are. Look at what you did. Don't take things personally, and remember, at the end of the road, you are going to get there, but you need to work with yourself, not be upset with what you've done. And the moment you can start to become disciplined and listen, you'll realize that you got this and you're going to make it happen. Guys, thank you for watching the video. I truly wish you a massive success in trading. I'll be doing shows, I'll be doing education. I'm always here for you guys. And the biggest advice I have for you is this skill changed my life and I have it forever. And all that I want for you is just to have a backup plan in life. You have a skill where you're the boss, you're in charge, and you actually know what you're doing. For me, that's empowerment, and that's exciting. And that's something that I truly want all of you guys to feel. Have a great day, and I'll see you guys all on the next video. And remember, keep trading simple. None of this is financial advice. This is my personal education that I've learned on the journey. And by you seeing me do things for myself, I'm pretty sure you're going to learn a lot on this journey.